This content should not be construed as financial or investment advice. I am simply sharing my personal views and perspectives, which I hope will educate and inform and help give you the confidence to make your own financial decisions. If you need financial investment advice, please seek in-person advice from a qualified, experienced, and regulated finance professional. YouTube will not save you.
Okay, well, I'm the fourth accountant, and today we're going to be talking to Ace, who is a commodities trader. So anybody who follows my channel or has seen some of my recordings will understand that trading is something I do talk about. I do have a video about trading and the psychology of trading to some degree. But as somebody who is not a trader, I do often speak to people like Ace to get a sense of how they view things from their perspective, how they interpret the markets, and often that informs my own retail conventional investment decisions, so to speak. So I do think we can learn a lot from people like Ace in terms of risk management and how they view things and the sort of decisions they make, and then apply that ourselves in terms of thinking about the investment decisions we're making over the long term and how we can gradually build our wealth, essentially. Yeah, over to you, Ace. Do you want to give a brief introduction to yourself in terms of what you do? And
Yeah, so I'll keep it nice and brief, as I'm known as a man of few words. So yeah, basically I kind of stumbled into trading when I moved from one country to another country, and I moved to a small town and I couldn't find a job. And then my friend, he basically introduced me to trading. Yeah, so growing up, I was always interested in trading, but I thought the barriers of entry were too high. And then it's only during the FX era, when there was a big FX boom in, I guess, across the world, that, when they introduced high leverage, I actually saw that you could actually make money from it being a retail investor. So then I decided to take it a bit more seriously then, basically. And that was roughly about 10 years ago, I would say, the FX boom. And I've been trading then ever since. It's been obviously a lot of ups and downs, a lot of learning, a big learning process. And, it's definitely not a get rich quick scheme or a get rich quick adventure. So yeah, that's basically how I got into it.
Cool. And just for the benefit of anybody that may not understand some of the terms you've used, so what do you mean by leverage? So it's something I've talked about, but again, I think it's better to hear it from somebody who actually does the thing.
Yeah, so in the short of it, leverage just basically means you can control a larger amount of money than you actually have. So if you're trading, with Forex, the reason why there's such high leverage is because Forex currencies, they don't move very much. So the percentage move is very little. So if you only have, let's say you have £10,000, but it only moves 1% in, let's say, 2 months, you're unable to, as a retail investor, you're unable to realize a good.
So I would say return, like a decent return. I'm not sure that's quite right, because obviously you're managing a P&L. Is that right?
Yeah. But yeah, so you can't it's difficult to make a good return on your money, basically. So what they did is they introduced leverage. So basically a bank or a broker will give you a loan based on collateral that you have. So if you have 10,000 collateral, your loan might be 10-1 leverage, which that means you could control 100,000 with that 10,000. And then basically with most proper brokers, you will pay interest. I'm not sure it was like that when they were trading on the spread betting or the CFD brokers, but with a proper broker, you would pay interest at a loan rate as well on that. And yeah, that's basically how leverage works.
Okay, cool. Yeah. So again, it's something I've talked about, but obviously I do like to recheck what I'm saying and putting out there, even though there's lots of caveats about financial advice I'm not giving, to be very, very clear. So in terms of like coming back to why you got into trading, and it's something we've obviously talked about separately, but one of the things you did enlighten me on actually was the fact that there is this aversion to risk. So when I thought about traders, I always felt like, I always sort of characterized them in some ways as being people that were quite happy to accept risk. And what you actually mentioned was, we're not talking for all traders, but again, traders actually tend to be relatively risk averse compared to what people actually think. So, is that something you can sort of talk about a bit more in terms of sort of like addressing that perception people may have of traders, and how do you actually manage risk? Like, what sort of things do you think about to help you manage risk?
Well, ultimately, to make money and have a career, you need to stay in the game. So it's just when you think about it logically, you will have to take you'd have to take into account risk a lot. Yeah, so to survive in the game or to make a living in the game, you need longevity. So logically, when you think about it, you have to take account of risk. It's just a logical outcome of, even if you are not risk averse, if you're going to survive in the game, you'll logically come to the conclusion that you need to look at risk. And another way to look at it is that traders are actually willing to accept a lot of risk, but it's the fact that they're actually willing to accept the risk that they think about risk, whereas other maybe unprofessional traders or people that have just got into the game, they don't actually want to accept the risk, so they don't even try to even think about the risk. They just want to think that they found the system that works, it's going to work, over leverage, whereas they're not deep down willing to actually accept risk. So they try not to think about it because they don't want to even think about taking a loss or even losing. So you can look at it two ways. I think traders, we are risk averse, but we are risk averse because it makes sense. But we actually we are willing to accept risk because that's what we do. That's what the job is. We're risk takers, and that's essentially what we're doing for a living. We're accepting risk. We're taking the other side of maybe a hedger, especially when you're dealing with commodities. The speculator, by definition, is the person that takes the risk away from the hedger. So yeah, you could look at it two ways, but it's important. That's the main thing. Risk is important, and managing risk is important. And to manage it, ways we manage it is, me personally, is cutting my losses short and letting my profits run. There are other traders who have a very high win rate who will not necessarily cut their losses as short, but it's a matter of perspective, and it's a matter of what works for you as well. But the one crucial thing is you have to account for risk, and it has to come into your calculations when you're designing your system and when you're trading, basically.
Yeah, I think that's a really powerful and useful insight. And I think for me, that is why I like talking to people like yourself, because I didn't actually think about it in that way you put it, the second way, whereby I think of myself actually as somebody who might be that person that ignores risk to a certain degree, and therefore I've been very averse to the idea of trading. But actually, it's that proactive acknowledgement of risk, and then using that to inform your risk management approach, um, is really, really insightful. And then obviously thinking about the art of what you're doing in terms of, okay, am I going to short, stop my losses, or let my losses run on the basis of some different strategy that may be in play. So I think that is a really, really useful insight. And I think it does actually give us a valuable insight in terms of how we think about risk, because I would agree, risk is not about avoiding it. It's typically about managing it. And if you truly want to avoid risk, you don't take part in the activity. But even then, everything comes with risk, and the only other defense you have is insurance. So I think that's a really, really valuable insight you've shared there. Okay, and then I think the other thing I wanted to find out from yourself as well is how do deal with trades going not the way you expect? So obviously you've got your risk management in place, but how do you've been doing this for 10 years plus now. Is it something that can be quite stressful still? Um, or is it something you're sort of accustomed to and you've kind of become desensitized to the feeling of, I thought something was going to happen, it's going the other way? How do you stop your account from blowing up? How do you manage the psychology of it? I guess it would be the question in a very simple way.
Yeah, the very simple answer would be, it just comes down to risk management, not trading too big. At the end of the day, it doesn't matter who you are, you have a psychological limit of what you can take, and you need to trade below that limit basically, because as soon as fear kicks in, you're not gonna react or to the situation correctly. You might see a position going against you when before you, in your calculations, you said, okay, if it drops down to this point, I'm not going to get out. But because your risk is too big now, you see the money disappearing, fear takes over, and then you get out of your position. The next day, the position reverses again and goes in your favor. So ultimately, it's going to be down to position size. And what you'll find is a lot of traders, when they start trading smaller, that's when they become successful. And that's when they actually start making more money. So it's a very psychological game, and it's about managing your own psychology. There's going to be some people who can take bigger positions, and there's going to be some people that have to take much smaller positions. But it comes down to personal perspective, personal psychology, and it's something you have to work out for yourself. But obviously, there's limits to how much risk you can take, because there's concepts like risk of ruin, which essentially means that if you trade too big, even with a successful strategy, you will still blow up your account. Because like when you flip a coin, so a coin's got two sides, it's 50% chance you're going to get heads, 50% chance you're going to get tails. If you have, let's say you have £10 and you bet, let's say 25 cents or 25 pence on every flip, essentially, eventually you will just balance out because it's 50-50. So it will just balance out. But if you have £10 and then you bet £5 on each flip, you're gonna hit a streak where you get 3 tails in a row, or 3 heads in a row, or even more, 4 heads in a row. So you're gonna essentially, if you're betting heads every time, you're essentially gonna blow up your account, even though your strategy should have brought you out at break even, simply because your leverage or your position size was too big, and you essentially blew up your account with a 50-50 strategy. So if you trade too big, you're doomed to fail. So there's a limit to how big you can trade and how much your position size can be.
Yeah, and that's really useful, because it does make me think about, in terms of my own world, businesses and not overstretching themselves and managing their cash runway. And another piece of advice I received from one of my friends, who was trading but sort of decided he wanted to be a value investor instead, was that basically it's about survival to some degree. And obviously it's more than survival, but it's about that longer term horizon, which obviously ties back to what you're talking about proactively accepting and managing risk. So I think all of those things tie into each other really, really nicely. And I guess on the final point, in terms of talking about, your own experience as a trader, for anybody who does want to get into trading, because I think sometimes in terms of myself, I can be a bit guilty of not putting people off, but making it sound like it's really, really risky, when actually, as you say, it's more around being aware of the risk and accepting it to some degree. If somebody really feels like they want to be a trader and it's something they believe they could be good at, um, and they don't have the benefit of your 10 years of experience, you know, what would you say to that person, without putting you on the spot, um, as a good piece of advice to get them on their way? And hopefully, I think what you've done quite well is manage expectations around, how long it actually takes to be able to do this consistently and successfully as you have done.
Essentially, I would say if they were very serious about it, because I'm like you, if somebody asks me about trading, my default response is to tell them that it's probably not for them. It's because a lot of people, when they come to you, you can see in their eyes that they want a get quick rich scheme or adventure. And I just basically say it's probably not for you. Or what I would do generally is I'll give them something to read, and generally they don't come back. So it wasn't for them. And essentially what I believe is if I tell somebody it's not for them and they don't do it, then it probably wasn't for them. But if they still go ahead and do it, then I will see they probably may have potential there. Not necessarily, but you're kind of weeding out the people who are just in it for the hype, or they want to just get money easily and quickly. And then you're weeding out the people that actually might put a serious effort or what is actually required into it. Because generally people, when they come to me, they want to get help, but most people, if you help them, you're essentially going to be wasting your time, and I don't have time to just be wasting on trying to help people that aren't really going to take it seriously. So that's my initial default response. My advice to them, if they did want to get into it, is to probably seek out a mentor, somebody they know who can trade, who's trading well. Seek out a mentor, or I would say you just have to just dip your feet in and try. But obviously, you can use a demo account, which will be the best thing to do at the beginning. Use a demo account just to get used to even just the broker you're using, their system, just to get used to it, just to get used to the feel. Then most people say that you should trade a system on a demo account for a long time until it's profitable before you actually start trading. But that didn't work for me, to be fair, because when you're trading with real money, it's very different experience from trading on a demo account. And it really didn't work for me. The best thing that I would say that would work for me, which I didn't necessarily do, I traded probably bigger than I should have when I started, but I would say just trade very small with your own capital, if you have discipline to do that. If you know you're going to probably try overtrade or something like that, then just use a demo account, I would say. And then just take it from there and see what that leads to. If you like it, then just look further into more avenues, research, read books. A lot of stuff on YouTube, I have to say, is very misleading, but there will be good stuff on YouTube, but a lot of it is, just snake oilsman. I think that's what they're called. A lot of that sort of stuff. But I would say books, you're probably more likely to get more high quality information if you're looking at books, or even websites where you have to read rather than just easy to consume information. Because when it's easy to consume, the people that are making it, they know that, and they try to grab the people that just want to kind of have take it with a gambling mentality. So I would say that. And with trading, there's so many different routes, there's so many different ways to trade. So I would definitely say just look at a lot of different avenues. Look what sort of trading is good for you. Is it swing trading? Is it day trading? Is it position trading? Is it value investing? So yeah, and obviously your situation as well. If you're in a job, can you really day trade? So yeah, I would say look at those different things.
Yeah, I think that's really, really good. And I like the vetting process you introduced there, because I think you're right. And I would attest to that as well. If you're very serious about something, if you have a lot of ambition, nobody can tell you no. You're going to see it through to the end, and you're going to see it through to failure. Hopefully it won't be a failure, but you will have that conviction. So I do like that approach. And I think you're right in terms of the challenge you raise regarding YouTube, because my own opinion would be YouTube is very, very valuable. I have to say that, I guess. But in all seriousness, I do think it's valuable because a lot of the knowledge they share is useful. But I think this is the point you're alluding to, what people have to understand is that they're trying to play the algorithm. They're trying to grow an audience. They are trying to sell something, as we all are. We all are selling our services or whatever it is, whether we're employed or otherwise. And there's a parasocial element to the relationship. So for them, their only feedback loop is that number, is that subscriber count, is that follower count. So, one of the caveats I've always raised, and I think many, people that speak about finance on YouTube often talk about, is that much of this information has to be individual to yourself, which is obviously why you're talking about the books and that self-learning. because there's no way you can expect somebody online to have any idea about what it is you want to do or what trading approach is suitable for you. So I think that is a fair challenge, and I think that is why, for me, I consume those type of videos as just entertainment more than anything else. So there is an educational element to it, but for me, it's just like, oh, is this funny? Is this person engaging? Does this person give me a laugh? And then I take little bits and pieces from what they're saying on that basis.
Yeah, one thing I would like to add actually is that in terms of like learning and the resources online, even reading resources, even books, YouTube, websites, they do tend to focus on what is actually the easy part of trading, which is different systems. Risk management is one of the easy parts. It's in the sense that it's easy to teach. I can tell somebody only risk 0.5% of your account on a single trade. Like these things are concepts that are very important, but they're also very easy to teach. What a lot of these resources don't teach is the psychological side and how to manage that, which is the most important side of trading, because you can have a good system, you can have good risk management, but if you can't manage it psychologically, you won't be successful. So that's another thing. I think that the psychological side is the most important side, and I would say look into that area. There's various books that focus on the psychology of trading. If you just do a Google search, what are the best books on psychology, that'll be probably the most important part of your learning and career in trading.
Yeah, it's interesting you talk about that, and this is a bit left field now, maybe, but I do want your opinion on this because when I think about what you're saying, I think about like athletes, I think about esports and professional high level gamers, and again, they often talk about having a positive mental attitude. So I know this is not what you're quite what you're saying here, but they talk about the fact if they get triggered, their performance declines. So they have to manage their mental health and their mental well-being. Do you see any analogies there, or do you think it's just completely different?
No, I see a lot of analogies. I was talking to a friend yesterday, and I
Mm.
was saying how like you can have time to be focused on trading. Like you can have the time can be there, but if you're tired, like you're not gonna trade well. So like you need to be physically, mentally peak. But when people think of trading, they think because it's something you're doing on your computer, they think these things don't matter. But they are very important. Just things that you wouldn't think matters, but around your trading, like just being well, having a good rest, good night's sleep is important, because what you got to understand is that you're putting yourself, like trading is for a human being is a very stressful position, because you're dealing with you're just dealing with pure uncertainty. You're dealing with money, which psychologically is a very triggering thing for a human being, like because it triggers your survival instincts, you know. Then your fight and flight instincts get triggered. Like if you're losing money, if you're gaining a lot of money, the greed gets triggered. So when you're tired, for you to manage these things, it becomes 10 times, 20 times harder, and your decisions start becoming like, even myself, sometimes if I'm tired, I'll make certain decisions, and maybe 2 days later, I'll look back and honestly, I can't understand why I even made the decision. But but you have to understand that trading, it just triggers a lot of primal instincts, like a lot of primal instincts. So you have to make sure you're in tip-top condition and mentally very in good shape, get a good night's sleep, and yeah.
Yeah, cool. No, I think again that's been really, really useful. And as I say, it's always good, I think, to hear things like this from people that actually do the thing that we're talking about, as I say, because I think for me, I understand these things in a very theoretical sense, but I've not gone through that journey, right? I've never faced the things, traders like yourself have faced in the same way. There's things I've done that people won't necessarily have faced. So again, we can kind of relate to it. but it's very difficult to put yourself in somebody else's shoes. So I think that's been really, really valuable, certainly from my perspective, and it's always a conversation I do enjoy having. So I was just thought now we've got a sort of understanding a little bit about how you view things as a trader. I did want to get your views on some of the things that have been happening, sort of more recently. And there has been obviously some controversy. I don't know if you've been following it or not at all, with the SpaceX IPO and the changes to the rules with respect to the inclusion on what they call index funds in the US. So these are like ETFs essentially, where based on the rules of those funds, they have to buy shares that are listed effectively. But what they've done is they've changed the rules so that first of all, SpaceX has a very shortened seasoning period. So normally the seasoning period might be about a year or so, but I think they reduced it to like 15 days or 5 days. So therefore, there's going to be a lot of volatility over the stock, and we're going to have to live with that. And also, typically, one of the requirements I understand is that the company should be profit making, and this is not the case currently with the SpaceX situation at the moment. But despite all of that, there is an expectation that they will be added to these funds, which will have to buy them, and they're backed normally by people's pensions. And then off the back of that, the early investors that bought Twitter, that was wrapped into SpaceX, for example, will be able to cash out, and it's basically being positioned in my mind as like a listing version of a pump and dump scheme of a crypto. That's a very sort of crude description, but that's kind of the way some people see this. So I just wanted to get your thoughts. Even if if you don't have any, that's fine. But I just wanted to get your thoughts around the SpaceX situation, if you have been following it.
Yeah, I've followed it a little bit, to be fair, not too much, to be fair, but I do understand all the issues. Well, I've heard about all the issues with in terms of getting it put into the index funds early and all the changing of the rules and stuff like that. What I would say is that money talks in a capitalistic society. Obviously, if that's a smaller company, it's not run by Elon Musk, they're not changing the rules for that company. So essentially, what we can say is that money talks in a capitalistic society. Other than that, we don't really know. I wouldn't say there anything else is a conspiracy theory, but we kind of just don't know. But what else I would say is that, forgetting all about that, when you actually look into the actual accounts and if it's money making, if it's not money making, it doesn't look too good in terms of where they evaluate the IPO, because it's already out now, where they evaluated it and future returns. And there's been a lot of different caveats that's been put into I can't remember what the book's called, but the prospectus, I think.
Yeah, it's called the prospectus. Yeah. I don't know there's a technical name, but I don't know what it is. But I think informally it's the prospectus. Yeah.
Yeah, they've put a lot of weird clauses in there and stuff like that. So I would say for me it looks very dodgy. Number one. Number two, it's on record, they've definitely changed rules for this company. So rules they've had in place for a long period of time, they've decided to change for this company. Three, I would say everybody's responsible for what they do with their money. So at the end of the day, they can be doing what they're doing, but you're not forced to invest into it. Even if you invest in, I guess, pension funds, if you've got a pension.
Yeah, that's where the controversy is the fact that you've got unsophisticated, I'm not sure that's a very kind way of putting it, but that's the technical term we see on things like Trading 212, unsophisticated investors who have put their money in something like an ETF with the idea they don't think about that, finding that if they were to look into it, there could be some exposure. So it's not every fund. And coming back to your point about money talks, to be fair to SpaceX, it's not the only company where the rules have been changed. I believe Microsoft, for example, they changed the rules for them as well. So as you say, if the company's big enough and high profile enough, and there's enough clout in terms of what's going on, And yeah, we do find in many situations, depending on who you are, the rules do change. So I think that's a fair call out. But coming back to your point around you're not forced to do anything, you're right. You're not, and arguably you can check with those funds to say, okay, are they including it, and then you can move your money. But I think the fact that it's just happened without people truly understanding it, unless they dig into it, is where the controversy has been. And I think you're right. The accounts look pretty ridiculous. But obviously, if you get in early and you sell off those stocks or you sell off those shares, then it's people with the funds that are left holding the bag potentially. And that's
Yeah.
been the concern.
Yeah, I think that is an issue. But at the same time, these funds, they are quite well diversified.
Yeah.
And I think that will insulate you to probably a very big extent. And I think a lot of these funds, because they are being, even though you're holding the bag, if you're holding these funds, because they are passive funds that they are getting invested into passively, it will, I guess, provide support
Yeah, because I
unless the
think
market, like when the market drops, the market drops. So even if SpaceX was in there or not, the market's gonna drop. So it's principally, like principles, ethically, I think it's a bit shady.
yeah.
I don't think that it's a massive issue in terms of your returns, uh, of what a massive issue in terms of what your returns would be if it was in there or if it was not in there,
Yeah, and I
if you
think
know what
you're
I mean.
right. I think you're right. And that's kind of how I see it as well. It's like ethically and in principle, what you would hope, actually, if I'm being honest, is that there had been more transparency with the index providers in terms of, and I know that's a bit unrealistic because they're not going to do this every time there's something happens, but in an idealistic world, you kind of feel like you wouldn't have to like watch a YouTube video or sort of dig through the weeds to kind of see what's going on. But I think this tells me that the difference between somewhere like the US and somewhere like the UK, where in our minds, and it's something I talked about in a recent video, we think about rules in a very principled way. So we think about, okay, what is the intention of the rule? Whilst in
Yeah,
places like America, it's like, okay, well, what does the rules say? And it's more gamified. It's like, okay, I will just follow the rules. So the index funds are technically, arguably, from a technical perspective, operating as they should. Whereby, if for whatever reason, whether it's a shortcut or otherwise, SpaceX has been introduced, technically they're part of the exchange now. If there's a massive bubble with the exchange, because most of it's the tech sector, it kind of is what it is. And your index fund is selling it to you on the basis that we represent the exchange. So if there's just a massive bubble, which is what you mentioned, then it kind of is what it is, unfortunately, in that regard. And then you have to think about how you diversify, how you manage risk, etc., etc. But the reason I wanted to speak about SpaceX actually, more specifically, is one of the things we were having. Again, this is not financial advice, but one of the things we were thinking or speculating on is, there's this idea that the valuation is very, very high, ridiculously high relative to other companies, and other benchmark metrics you would use. Um, so there was thinking around shorting of SpaceX stock. Um, what is your own feeling about this, as an idea, I suppose, without making a recommendation? I don't know if it's even possible, but I think you understand what I'm trying to say.
um, essentially, I haven't heard anything about people wanting to short it, but I'm sure that's out there. But personally and essentially, I wouldn't short a stock just because it's too high. It it doesn't make sense because it can still go higher. So I wouldn't short a stock simply based on that, to be fair. I think with trading and pricing in general and the market price of anything in general, it's normally more based on just how people feel, to be fair. You know, a loaf of bread could be priced at, well, the general consensus could be that a loaf of bread is worth £1 today. Tomorrow, it could be worth £2 simply because something happened where the sentiment means, even though there's the same amount of bread still there and the same amount of people that's demanding it, just because maybe, I don't know, we learn in economics, there's things that actually move the demand curve, the demand and supply curves, and there's things that, and then you've got like the price change when you move up and down it. So essentially there's qualitative things that can move the demand curve and just change the price of something. So real and truly, what something's worth is just what somebody's willing to pay for it at the end of the day.
Yeah, and I think that's my own position as well. I kind of view price. I don't know if I've got the right words for it, but for me, I view it, broadly speaking, as you've said, it just reflects demand at that particular point in time and the ability to pay that price, right? So if you think about the housing market, for example, one of the things that can suppress house prices is the ability of people to borrow and their salaries. And what you tend to find is that if they can borrow more and get paid more, perversely, house prices go up, right? So I think for me, that's the way I tend to think about prices in a particular way. And I think you're right with respect to any feeling about shorting SpaceX stock, because I think my own feeling would be, what you have to consider, whether you decide to do this or not, is, I think you're right. SpaceX has a lot of support still. I think it has a lot of regulatory support, as we've acknowledged with the exchange and the IPO itself. He's obviously close to the current government. He is now, on paper, the richest man that's ever potentially lived. So that will always have weight with any government. So even if Donald Trump moves on, he's still going to have a lot of clout and leverage and influence over any other US leader. He's a big employer through all of this. And I'm not saying it's too big to fail. I just think there's just a lot of things that will just keep it going, which makes it very difficult to think about shorting it in the sense that it will crash and burn someday. Like I don't know when or if that could happen or where it would go to.
Yeah, in terms of shorting as well, you have to look at the time frame.
Yeah,
Now, if
exactly.
you're
That's
not
basically what I'm talking about. Yeah.
a massive institution that's known for short selling, then you shouldn't really be short selling any stock if you're planning to hold it for a long time. So if you feel that the market's it's just crashed, just say there's a big dip in the market one day and you feel the market's gonna carry on going down, then you could essentially short SpaceX because it will go down with the market. But you could also probably short any other stock that's going down as well, like Microsoft,
Yeah,
if that's going down
exactly.
with the
Yeah.
market. You wouldn't necessarily have to be SpaceX. So just shorting SpaceX on the premise that it's a bad company and you think it's going to crash and burn and just hold it till it crash, I would definitely not recommend something like that unless you're one of those big activist investor groups that short companies that they feel are doing underhand stuff. They're like experts at shorting and they will normally put out a lot of propaganda with their
Exactly. Yeah.
news to get other people to follow suit. But as a retail investor, if you're a retail investor, I definitely wouldn't be short in probably not any stock, to be fair, unless you're like you've been in the game for a good few years.
Yeah, and I would agree. And I think for me, that is why I tend to, because you're right. I think if you're going to short something, SpaceX, I don't think particularly stands out. You could take that approach with anything that has
Yeah.
volatility, I suppose. And I think you're right. Broadly speaking, that is the game for, those professional shorters. I don't know what the technical term is, because my suspicion is with many of them, they have like publicly available information, but it's kind of not public because they've kind of like done research, they've investigated, they've got like contacts like within the actual business, and they kind of know, okay, there's something like potentially like illegal going on in the business, or maybe the product doesn't work. and nobody knows that yet, or maybe there's a patent missing or whatever, right? So they tend to kind of have that type of knowledge which a retail investor will never
Yeah,
have and can never
and
garner because they don't have the resources to like get that information.
but and even with that type of knowledge, it's still a very highly risky
Yes.
venture for them. So a lot of them lose big. A lot of these big short selling institutions, a lot of them lose big. They obviously win big. That covers their losses, but they're not. Their hit rate is not necessarily super high. Like maybe less than 50%, but because when it does work, they're very successful. It can cover those losses. And what we're finding now in in the current last few years is that a lot of these short selling activist investors are disappearing because the market is just going one way when it's defying logic in their eyes, sometimes. So now a lot of them are just giving up the short selling thing because money. I mean, the stock market, a lot of it is based on, do people have money, and if people got excess money, where are they going to put that money? So for instance, when the interest rates were low, the stock market was just going up because people have money and they want to put it somewhere. They don't want to put it in the bank because they're not getting anything from the bank. They don't want to put it in bonds because the what you're going to get back on the bond is going to be small. So they're putting it into the stock market. So the stock market's going up. So a lot of the stock market valuations is just based on how the easiness of money, basically. So if money's not tight and money's easy, or if money gets pumped into the economy, like after the pandemic, then the stock market will go up. And in theory, inflation will eventually start to go up. Then they have to raise rates again because to calm inflation. And when they raise rates, then people can now put their money into their bank because rates are going to be higher. They can now put it into bonds and the stock market should fall. So a lot of trading is not necessarily based on the actual fundamentals of a company, because what you tend to find is that when the market does sell off, even good companies sell off. When the
Yeah.
market does go up, even bad companies go up. So, obviously you can pick stocks, and if you get a good company in a good market, then potentially you're going to do your returns are going to be a lot better, and vice versa. If you get a bad company in a bad market, your returns are going to be potentially better as well. So, it's more there's more, what's the word, nuances. It's more nuanced than just, is this a good company, is this a bad company, is SpaceX, because in a good market, even if SpaceX numbers are bad, it's going to go up, and it'll probably go up more than a lot of other stocks, simply because of the hype, simply because of what it is, who it is,
Yeah.
and stuff like that. So it's, yeah, going back to the shorting situation, it would be quite a risky one to short, but it will go down, it will go up. Nothing goes up in a straight line, nothing goes down in a straight line. So there would potentially be opportunities to short it, but that would be if you're a seasoned trader who knows how to time the market, knows that whatever technical dynamics, it looks like the price is going to go down, and they get in and out fairly quickly.
Yeah, and I think anyone I know that's kind of done it, that's what they've done. And I think a lot of people at the time of the IPO, that's the kind of thing they did. They kind of flipped their trades very, very quickly to take advantage of those movements. But as you say, in terms of trying to think about shorting it, which I think some people, certainly in the retail space, may consider, I think for me is something you would have to treat with extreme caution. And like you, I wouldn't view SpaceX um, as any different as any other stock or share that you could potentially take that approach on. And I think the other thing I would note about Elon Musk in general is that just anecdotally, I know a lot of people just want to get behind his businesses and just want to support his businesses. So I think that at the moment there's always going to be a lot of support for anything he does. He's talking about going to Mars. Do any of us actually believe he's going to end up in Mars? But I think a lot of people are still willing to throw money at the endeavor. So, but coming back to your point actually around excess capital, as I would call it, and how it affects the overall markets. There's this theory, another theory, again, it's a bit conspiratorial, that one of the reasons SpaceX IPO happened, because obviously it's got an AI, I think Rock's rolled into SpaceX as well. So it has an AI, let's call it division, is that now Claude, I mean Anthropic, which has Claude, and OpenAI, which has ChatGPT, are now thinking about their own IPOs. But the idea was that, well, they also want to have a company that's, 1 trillion, 2 trillion valuation market cap. But there's the concern now, again, this is just something I'm hearing, rumors, Chinese whispers, is that, because of this SpaceX IPO, there's not going to be enough money for them. So again, I don't know what your thoughts are about that, if you have any, because again, I don't know if you'd even have heard about that or followed it. It may not even be a sensible theory, but it is something I did hear, which ties back to your point around the fact that if the people have money to spend, they may just be happy to put money into a company that's quite aspirational.
Yeah, essentially, I would say that it's probably true. There's only a certain amount of money to go around. So often what you do find that's happened in the past is that there'll be a race to get the IPOs out to essentially get the money. So I think, yeah, that could definitely be true. And that just reminded me of a book that I read actually a while ago when I first started trading, which is called The Money Game, I think by Adam Smith, where it essentially breaks down that the stock market and investing in this stuff is just a game. It's not really about, it's more of a game about extracting wealth from one part of society to another part of society, and one of its main points is that where the actual big money is made in the stock market is actually IPOs. So what you get is when the market's going up a lot, what you'll get, so say like in the was it the 2000 boom, the IT boom, or what was it
Your
called?
was it .com boom?
Yeah, yeah, the
Yeah.
.com boom. What you'll get is once the market's going up very high, you just get a lot of people with similar companies just doing IPOs to basically turn their whatever they put into that company into, or to get a return back on what they've invested into their company. Basically, it could be a rubbish company, but they just put .com on the end of the name. You saw it even with crypto. A lot of companies would just say, we're now buying crypto now, and
Well,
then
they're doing it with
they're
AI now.
yeah,
I'm sure you've noticed that every company is an AI company now.
yes, and then they'll just put that in the name or something. It could be any company, but we're now buy crypto now, or we'll just say that we accept crypto now or something, and then the stock market their price will go up. So I think definitely, I think it's probably true. They are probably thinking, okay, we've had this big IPO, we need to get our one out, or maybe we want to bring it forward before somebody gets theirs out. So yeah, I think that's probably true. To be fair, I wouldn't say a
Yeah, because
conspiracy theory in my eyes.
yeah, because obviously with the SpaceX IPO, what I heard was that immediately he entered into another loan, like another like bridging loan, apparently, despite the fact they'd done this massive raise, which did raise a few eyebrows, as well as the accounting you talked about. And obviously, if you look into the AI industry in general, it is struggling with a return on investment. So a lot of money is going into building these data centers and training the AI, which needs to be continually trained. Like you can't, there's never a point where it stops training like a human being, right? It just has to constantly be fed data. It needs more power. It needs more compute. So the running costs are absolutely astronomical, and apparently open AI like, are burning through like billions every quarter. Um, so it's almost like if they don't keep raising money, like how do they keep going? Um, and I think that is why people are sort of maybe making this tenuous link to like, oh, should I think about shorting the AI industry or certain companies or SpaceX? Because when you look at the financing and the circular financing where people are buying from people that are bought from them, and it's all really, really weird. Um, it's not like anything we've seen before, but maybe the answer is that book you talked about, The Money Game. It's all around doing something that means that you're extracting. You build a vehicle basically that extracts or transfers wealth from one place to another, and that's actually what a business is. A business is not about providing a service; it's about creating something that allows you to move wealth from one place to another.
Yeah, I would say so. One thing I would say is that in terms of previous bubbles and this, what essentially sounds like a bubble in terms of when you look at the way they're taking loans from each other and stuff like that. I would say is that these companies now are so big that they have a lot of cash reserves. That's why there's not as much panic in terms of institutional investors and stuff like that, because these companies are just so big and they have so much money that although maybe they're burning money, they're not in a position where they're just gonna go bankrupt or have to file for what is it, Section 11 bankruptcy or something like that in America. So they're
Yeah,
not really in that position. So there's not, even though they're just burning through cash, it doesn't look like they're getting a return on their cash. When you look into the future, it looks like they're gonna have to burn even more cash. The fact is, they can kind of just, they have so much cash that they can kind of keep burning cash and see who gets lucky and gets
yeah. I
to
think
take
that
the
is the
spoils,
game.
basically.
I think that's what Mark Zuckerberg actually said. He said, you know, we have to keep doing this. It's not the exact words he used, but I'm kind of giving my own interpretation based on my vague memory of what he was saying. But essentially, he was like, look, the importance of winning the AI race justifies what's going on financially, because it's almost like if you can develop AGI, it's so powerful. It's
Yeah,
like you can't be the one that didn't do it. That's kind of how they see it. It's like by any means necessary, we are going to win that race.
yeah. And essentially, when you have so much cash, what do you do with it?
Yeah.
So it's like, if you're a business, then essentially you give it back to your shareholders or you invest it into research and development. So it's like, what do you do with it at the end of the day? So you might as well take the risk, spend the money, and hope to win at the end of the day. I mean, obviously you could do in an ideal world. I'm sure a lot of people would rather that actually, with
Pay a
that money,
dividend.
pay taxes
Pay
and
taxes or
stuff
pay a
like that.
dividend,
Yeah, but they will pay dividends and stuff. But
but they could
I
pay
think,
more.
yeah, you could pay more dividend, but or pay some taxes even.
I don't think they care about taxes in the
Yeah,
US,
they
to be
don't.
honest. I mean,
They
I think
don't.
I would, but I think most people I speak, I don't know how you feel about taxes. I mean, you don't have to say if you don't want to, but I think for me, the impression I get is most people don't care about taxes. They care about if they have a stake in the business,
Yeah,
and
yeah,
the
for
company has
sure.
cash,
Yeah,
they just
yeah,
want their piece.
yeah, for sure, for sure. And I think a lot of people, I would say, I'm just talking about people in general, but in terms of the
Yeah, yeah.
people that actually have a stake in a company, I would probably think they'll prefer the research and development route. Obviously, they'll want a dividend, but they have so much money that in these companies that it is better you have to invest in research and development. You have to think about the future, but it's just, and it seems this is where the future is going. So that's what they're investing in, basically. But yeah. Mhm.
Okay. And then on talking about, I mean, it's something you talked about briefly actually. So one of the other things that's sort of been in the news recently, well, I say recently, it's been in the news for quite some time, is Bitcoin and crypto, and the fact that crypto now is basically at half the value it was, I believe, in October 2025. So last year it was around about $120,000 per Bitcoin. It's now, I mean, I haven't checked the price, but last time I checked, it was around 60,000, 55,000 per Bitcoin. And every other crypto is pretty much a sea of red. If you look at any trading apps, it's a pretty horrific sight. So I just wanted to get your thoughts about crypto in general, and maybe you can, if it's relevant, I suppose, or helpful, because obviously I mentioned you're a commodities trader. And I guess the question is, well, why commodities, I suppose, as opposed to something else? And what is your thoughts around crypto as to, is it something you'd be interested in or not interested in? Yeah.
Essentially, why commodities? Because that's simply what I resonate with
Yeah.
more. I simply resonate with it more. Also, I'm a very detailed person. So if I was to trade stocks, which I do trade stocks to be fair, but I trade the ETFs of the commodities. So it's essentially commodities, but it's still stocks. But if I was to trade companies, there's just too many companies to look at. So you need to have, when we're trading, you need to have some sort of focus. Plus, I read the market better in terms of the macro environment,
Yeah.
the geopolitical environment, the macro environment, which is, I would say, leans better for commodities. So I would say, yeah, it's just a personal thing, just the way what I resonate with, and it's when you're looking at a top-down approach rather than looking at earnings and stuff like that, it makes more sense for me to trade commodities. I like to trade short and long
Yeah.
just as much as each other. I'm not really more long, or I'm not really more short. I would do both just as equally. Whereas if you're trading probably just normal stocks and stuff, you probably want a long bias. Whereas commodities, they're cyclical industries, so they go up, they go down, they go up, they go down, which suits me a lot better, I would say, because I generally like to have a position some long positions and some short positions at the same time. So yeah, that's why I would say I trade commodities. I also trade shipping stocks, which is also a cyclical industry, and it essentially works like a commodity because the stocks move up and down with the shipping rates, with the freight rates, which are essentially a commodity, which is essentially a commodity. So I trade shipping stocks as well, which ties into other commodities because they move the commodities. So for instance, on tankers, you're going to be moving oil. On dry bulk shipping, you're going to be moving stuff like coal, even grains and stuff like that on the smaller ships, like corn, wheat, and different commodities. So it all ties in. And I have been trading Bitcoin and Ether,
Ah.
but the ETFs, so not directly, but I've been trading the ETFs of both of them. So essentially, I do see the reason why I trade Bitcoin is because I do see it as a commodity, just like a digital gold. I know it's had different definitions over the years,
Yeah,
but for
it has.
me, when I look at it fundamentally, whatever you want to call it, it is essentially a commodity. It's essentially a digital gold, whether people value it or not. That's still essentially how it works. As in, obviously you can't use it for stuff like you can use gold for stuff. Gold does have its uses, but essentially gold is treated over the centuries and through the ages as a store of value. I think Bitcoin, it was never a currency for me. It was more of a store of value for me.
Yeah.
So I traded Bitcoin, Ether. I trade as well because I do like to trade uh, different securities that have the same correlation. That's one of my trading techniques that I use. So yeah, I trade Ether as well. Yeah.
Yeah. So when you talk about the correlation, do you mean the correlation between Ether and Bitcoin?
Yeah.
Yeah. Okay, cool. So yeah, we'll probably come back to that actually, because you kind of prompted something in my mind when you talked about oil. I guess before we come back to the Bitcoin question, which I know I asked you before, what is your thoughts about the war in Iran then, and how has that affected, some of the decisions you've made around trading at a high level?
Mm, I would say that actually been a tricky one.
Yeah.
It's been a tricky one because a lot of the fundamentals have not necessarily been reflected in the futures prices because futures prices are by definition a future price. So what you're seeing is a lot of the actual prices that were getting traded in the physical market was very different to the actual futures price. And obviously as a trader, you can't trade the physical market. or as a online trader or a paper trader, what they call it. You can't trade the physical market, so you need to just trade the futures market. So it was a bit tricky, but I would say a lot of things are reflected in the price before you might hear it in the news, essentially. So where the money's going, the news will probably follow where the money's going, because obviously people in the know and people that maybe not be in the know, but in terms of they got the ear of somebody, but they've just looked at the different scenarios and they feel this is more likely to happen, and they have a lot of money, so they've put a lot of effort into that decision, because at the end of the day, trading is all about managing risk for the top guys and for everybody that's trading. It often does show up in the market first.
Yeah. And I guess that leads on to another question. The Trump trade. Well, not, I don't know if Trump actually made the trade, but he made the announcement. But 15 minutes before he made the announcement, there was these massive trades. I can't remember what types of trades they were, where a lot of individuals made a lot of money. Did you hear about that actually, first of all?
Yeah, I heard a lot
And then
about it,
is
to
that
be fair.
something that could be feasible? Because obviously the current assumption, I mean, it doesn't help it's Donald Trump and he's not particularly liked, but the current assumption is that it was probably insider trading, and that would be my own view. But obviously I have no evidence. I'm simply speculating. As somebody that's more educated on these things, what would your is that just a feasible, excellent trade that somebody could have made?
Essentially, yes,
Okay.
it could be an excellent trade that somebody made, but in all likelihood, no.
And
But
why no? Is it just for the same reasons I would say, like it's almost too much of a coincidence, or is there more to your answer than my own speculation, conspiracy theory type response?
I would just say we just got to look at probabilities.
Yeah.
So, because it's probabilities, like I said, essentially it could be a good trader who just managed to do it. But in all likelihood, when you look at probabilities, it wasn't. So, because you got to look at the size of the trade
Yeah.
and how well timed the trade was.
I think for me it was more
So,
the size, more so than the time. I mean, the timing is for me, it's like it's the conviction to be able to do it.
yeah,
It comes back to your original point, right? About not not trading too big. Right. And I know
yeah,
these people are very, very wealthy, obviously, but even at that level, that number was big. I can't remember the exact number in terms of the trade, but it doesn't matter who you are. The number was huge.
and it's also another important thing is the Trump announcements. Did people know he was going to announce at a certain time, but they just didn't know what he was going to announce? That would change it a lot. But in my
That's
understanding, they
possible.
didn't.
That's possible. To be fair, they may have known he was going to make an announcement, and obviously
Yeah,
people could have put two and two together and actually got four rather than five. I think you're right there. I think that's a fair challenge. And I think one of the things I did talk about is that if you are following him on social, Truth Social, you can kind of get a sense, I'd imagine, of who you're dealing with. So it is possible. But
yeah,
I think for me, the thing that was kind of like, I don't believe this was the size of the trades more than anything
yeah.
else.
And another thing is that it's generally well known within trading, within the institutions that trade, even in terms of the regulators, that insider trading happens all the time.
Yeah, 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 yeah.
Like,
It
it
definitely
happens all
happens
the
all the
time.
time.
And
Yeah.
then when you're dealing with stuff like commodities and cryptos, it's a lot easier to you can get away with insider trading a lot easier, because in theory there's no insider trading, because it's a commodity.
Hmm.
Everyone's got control over it. All the countries can buy, sell it. It's not like a company where you have this real insider information that nobody has access to. But the the information in terms of commodities is not really. I think at a certain point you couldn't even get done for insider trading with commodities, which does make sense to me. But I think with this situation, when you have one man's words that affect these things so much, it's like they are taking, you know, advantage and kind of but I think now you can get done for insider trading on commodities in extreme circumstances, but the fact you're doing it on these things makes it a lot more difficult to prosecute anybody.
Yeah, and I think for me, coming back to your point about this has been going on, for as long as there has been trading and investing and markets, I think many people, it's almost like the risk point you're making, actually, where to a certain degree, people like myself may put their head in the sand a little bit when it comes to risk. And it might be the same with insider trading. It's like we all kind of know it's happening, but we don't want to see it in our faces. But Donald Trump is just like, you know what, just remove the curtain. I'm out here. And I think for me, that's what, for many people, certainly in the news and just generally, we're just like, this is crazy. And the fact that, because again, they could have hidden that trade as well. I think that was the other thing that people were alluding to. There was no reason that trade, if it happened 15 minutes before, maybe it could have happened a day before. I don't know, right? I'm just speculating now. And equally, they could have positioned the trades maybe to maybe spread them out a bit or do something. Because I know with crypto, for example, you don't often want to show massive crypto movements on the blockchain because it sends signals around the crypto. So you tend to break it up, use different wallets, etc., etc. And there's no reason you couldn't take that approach theoretically anyway. I mean, I don't know the ins and outs, and correct me if I'm wrong, but theoretically they could have just done something to disguise it, conceal it.
Yeah.
But it's
And
almost
what
like they
were
just did not care.
what were the trades on? I've forgotten myself.
I think it
What were
was
the
on oil's futures, actually. I mean, I'd have to double check.
yeah, oil futures were definitely one, but they never did the market, did they?
What, the
Did they ever do the
speculation
market?
markets?
No, the S&P, anything like that. I
Yeah, I
think
don't know about that. So I
yeah,
heard it was oil futures. I
yeah,
think I
it was
heard
definitely oil futures on one of the occasions. It
yeah,
was
yeah,
definitely oil futures. Actually, yeah, it was I remember now. It was the WTICs for the American ones, and then more or less near the same time that the Brent futures got sold as well. So the
yeah.
thing
And then
is on that,
sorry, go on.
yeah, the thing is with futures, like I said, it's very hard to get done for insider trading on futures and stuff because they're globally traded commodities. You can't really, in theory, have insider information because what Donald Trump says, it's not necessarily going to move the market a certain way. But with stocks, it's a lot easier to get done or prosecuted for insider trading because you have a monopoly on the information.
Yeah.
And you can have very sensitive information. Whereas in theory, Donald Trump's comments were very sensitive information. In practice, they turned out to be very insensitive information, but it's very difficult to get done in it. And I think that's probably why they were so brazen when they done it. Also, in terms of timing, what I was saying before, because timing is very important because if you want your best chances of making money, you want to do it as close to his
Right. Okay.
statement as
Right. Yeah.
possible. Plus, because you want to get in, you want to get out. If you do it early, then people might start. They will see it. They will start selling it, which could also help. Or maybe they don't see it. Maybe they see it and they go the other way, and now they squeeze your short position. And then
Right.
now you're
Okay.
losing money. So there's a lot of extra with time. There's a lot of extra risk. The more time you're in the market, the more things that can happen. So
Basically, there's more variables to think about,
yeah,
essentially. Yeah.
yeah,
Yeah, because that's why I was asking your opinion on that. Because again, I'm trying to think about, is there a way they can conceal it? But I guess in the context of what you're saying, is that even the right question? If first of all, it's technically not insider trading, so what are you trying to conceal? Secondly, it's time sensitive. And thirdly, coming back to your point, actually, he did announce it publicly. So arguably anybody that acted was acting technically off the back of something that was said publicly.
Yeah.
Or anticipating something that he might say publicly.
Yeah. And in terms of stocks, for instance, what you said earlier about maybe scaling into your position, that would make more sense Because if you're doing inside trading with stocks, you want to just probably scale into it. You don't want to be too obvious. You can, because you have all the information, you're in so much more control. So you have the time to scale into it. You can do it in a better way. Whereas in terms of futures, oil, you don't have that incentive to be planning out that long. You don't want the extra risk that you have with the oil and stuff like that. Because imagine something else happened. Maybe they thought the stocks are going to go down. I mean, the oil's going to go down. So they want to do it a week ahead of time because they think Trump's going to announce something a week later. But then all of a sudden, maybe Israel just bombs Iran, decapitates them, and then now the Strait of Hormuz gets opened. Now the price or whatever, where that wouldn't make sense, but just say it was the other way around, where the price was going to go up because something happened that Israel done. You see what happens. So with futures, it makes sense that they did it as close as they were, as close as possible to the announcement. So yeah.
Okay, and then we can now circle back to Bitcoin. And obviously, you mentioned it is something now that you are trading as well as Ether. And I think, objectively speaking, I can understand whether or not anyone believes in these things. They could still use it, as a means to an end from a trading perspective. But what is your thinking around crypto? Because as I say, at the moment, it's receiving quite a lot of negativity, and arguably rightly so. But I just wanted to get your opinion around, the idea of crypto, decentralized finance, because what I'm noticing, sorry to jump in there, but what I'm noticing is that despite the concerns about it, a lot of institutions are still building products around crypto. So obviously we talked about the ETF, and there's also the idea of real world assets, where again they're using crypto technology and blockchains to represent things like shares, and deeds, and financial products on the blockchain. So there's a real world version that it's pegged to, like stablecoin, but then on the blockchain they're using that to do a lot. I think what they're calling it is like repo financing, whereby you can have like these massive short term, and these are very, very short term, but massive financing deals. I don't know if repo is the right word, but they're using blockchain to do these things where typically it might be a day, but if you can do it on the blockchain, you can do it literally like within hours. So these things you've heard of before, assuming repo is the right terminology. And as I say, more generally, what is your feeling around crypto and its future, and what it could be doing, if anything, in the sort of institutional or traditional finance space?
Yeah, personally, I'm no expert on crypto, blockchain, any of that stuff, and you don't necessarily need to be an expert to trade it. What I would say is that in the market, a lot of information is priced in beforehand.
Yeah.
So, I mean, well, you're looking at least 3 months in stocks. With stocks, you're looking at least 3 months forward. With bigger, larger moves, maybe you're looking, see if you're trading like longer periods of time, you're looking forward a lot. So in terms of the last top of the crypto market, the difference, because there was a thing going around where whenever crypto doubles or whenever they half it, they do the halving of
Yeah, so
Bitcoin.
it's the halving, it's called, where what that is basically the mining rewards are halved, but the
Yeah, yeah,
computation is harder. So
yeah.
that's
And there
essentially
was
what they're
this,
talking about.
yeah, because I know people that, are into crypto, and they were telling me how every time you do the halving a year later, crypto goes up by, like Bitcoin goes up by like 100% or whatever. I was doing a bit of research. There was also, but I was hearing a lot of talk of that the institutions are now into crypto already. They've bought crypto. So
Yeah.
before there was always the thing where it's going to be made legal, the institutions are going to buy it. So there was always that narrative. But once they got into it, there wasn't that narrative anymore. And for me personally, I more or less just looked at the charts, looked at where the money's going on the charts. And when I thought it was going to go down, I shorted basically. So I've
Okay.
actually only traded it short the last whatever, since the top. I've only traded it short. And purely based on technicals, to be fair, and also the sentiment. Because when I hear these things coming up, because before I never heard about the halving,
Yeah.
but when I looked back after the halving a year later, it was true. It would go up like 100% or whatever. But now I was hearing about the halving everywhere. So when you normally start hearing about something, that's when it's probably not going to work, because if everyone knows something's going to work, it's already priced in.
Yeah.
No one's going to wait to the halving. If they think, oh, this is going to go up, they're going to start buying it before the halving. Then when the halving actually happens, you may see the opposite effect. So it's the same with the normal market, to say the S&P 500 or the normal stock market. It's when your mum and dad starts talking about investing is when the market is normally going to drop. That's normally the top of the market, because once everybody knows about it, that's a big sign that the trade is crowded at the end of the day. So my kind of feeling was that it's not going to go up because everyone's saying it is. So how can it go up?
Yeah, and I think
Because
that kind of insight, sorry to interrupt you, but I think that kind of insight comes with experience, which is why, and I think you're right to talk about that as well, but it's often why I talk about the importance of experience, and not just with trading, but with any profession actually, or anything you do. I think, learning the technicals is obviously the groundwork. That's like the entry level as far as I'm concerned. But to have that confidence in these, because again, that's a theory, right? What you've outlined is not, necessarily a prediction. No one can really know. But because you've got that confidence of knowing and understanding, what typically would happen, and even if you're wrong, how to manage it, right? And I think that's where experience becomes really, really powerful. Was there
yeah,
something
and
else you wanted to say before I interrupted you?
no, but just coming off what you just said now, essentially, a theory is just a theory. I
Yeah.
could have that theory and it still could have went up.
Mm,
So your theory, even if you're fundamental, you consider yourself a fundamental trader, your theory is still a theory. It's just your opinion at the end of the day. Your opinion
mm,
could be perfectly sound, but if nobody else believes your opinion and everyone believes they feel like they should buy it, the price is going to go up. So that's why risk management is so important. Also, in my trading, if I think something's going to happen, I don't just say this is going to happen to let me buy it, or this is going to happen to let me sell it. The technicals will determine when I buy and sell.
mm.
So it's always based on technicals in terms of timing. Theory can be based in macro, political, geopolitical stuff, fundamental stuff. For instance, an example might be when Russia invaded Ukraine.
Mm.
So
I
you
don't know
might
when
see
they
that.
attacked, but yeah.
Yeah. So you at that time you would have thought, okay, they invaded Ukraine. Now the US, they start putting sanctions on Russia, and then they start freezing Russian money. Europeans, or I guess the Europeans, I think UK definitely did, also started freezing Russians' money. So now a theory might be, okay, if they're freezing people's assets because they've gone into war, if I'm China now, or I'm another country that might feel like, I might get into some sort of conflict or proxy conflict with the US, which essentially is the dollar's the reserve currency, am I going to carry on investing into treasuries, or am I going to try and diversify? And if I'm going to diversify, where am I going to diversify to? So your theory might be, okay, what does that leave? That only leaves gold or crypto.
Mm.
So you might feel, okay, gold's going to go up over the next few years because central banks are going to be buying it because of the weaponization of the dollar. But
Yeah, because I was
you
watching
wouldn't,
something about the dollar
yeah,
actually, because the dollar was meant to actually be gold in essence way back when it was pegged to
yeah,
gold.
it was backed by the gold,
Yeah.
but then they obviously got into troubles financially and they had to depeg it or whatnot. But yeah, so you'd have a theory like that, but you wouldn't necessarily just buy it because of that theory, because it could still go down in the short term. If you're not using leverage, then it's safer to just buy
Mm.
it on your theory. But if you're using leverage, you definitely need to wait to have some sort of technical trigger. before actually buying, because that also means you have a good place to leave the trade if it doesn't go your way.
Yeah.
Which is important. But if you just buy in no man's land, when do you get out of the trade if it doesn't go your way? You don't really have a place to do it. And if you've got leverage, that's obviously very dangerous. But if you're just an investor and not using leverage, then you could, but you just got to be patient, because you might have to end up being very patient. But yeah, so I would say technicals is very important for me. And this just comes off the back of the crypto trade I was talking about, the shorts. I had a vague theory. It wasn't a strong theory, but I just waited till the technicals confirmed that it's going to go down. And did they go down because of that reason, or did they go down for a different reason? Who knows?
Yeah, and I think that's really, really good. And I think what's good there, and I think what's clear to me, is that that's following your own trading philosophy as well. So like you said, when you made that distinction between yourself and say a different type of trader who may let positions run longer, for example, that sort of really came through in terms of what you're talking about there, and the risk management approach you take, where you stop your losses depending on the technicals of the particular trade. So I guess the more fundamental question, I suppose, then, and I think it is useful to ask someone like yourself who doesn't consider themselves an expert in crypto, what would it take for you outside of trading, I guess, to look into it more? Because obviously this is one of the theories about crypto, if I'm being brutally honest, and it's a bit like the currency situation, where initially it was introduced as a currency, didn't work as a currency, and I agree with you that it was just too volatile. And for me, it never really worked on that basis until stable coins, for example. It then moved into this digital asset space. It tried to be art at one point through NFT, that failed. And now seemingly it's not doing the thing that gold would be doing, whereby there's events going on around the world. Gold price has stayed relatively stable in the short term, and over the long term has gone up, whilst crypto still, and Bitcoin in particular, still is all over the place. So, in terms of like getting into crypto a bit more and thinking about it in the same way you might think about gold or having a bank account, from your perspective as someone who's not close to it, what do you think the barriers are to that idea?
I think the barriers is just human psychology.
Mm.
So with stuff like gold, it's just all through our history, it's been valued. Whereas stuff like crypto is new. It may get to a stage where, well, let's say specific cryptos like Bitcoin, we talk about that in specifically, it may get to a stage where it's valued to that extent. But in a technological space, there's always the possibility something else gets created
Yeah, I would agree.
that
I
can
would agree.
usurp it. So I don't know if there could ever be that fidelity, I think's the word, or that faith in a specific crypto, because like you have in gold, because gold, unless we find some sort of new mineral or something, and even if we did,
I think we
probably
have.
no one's,
I think
yeah,
that's the irony. I think you're right. I think with gold, like it's almost like the law of gold, like because there's like platinum, there's like
yeah,
palladium, I'm sure there's even rarer things, but no one cares.
yeah,
It's
definitely rare
because they only
things.
want gold. I think you're absolutely
But
right, and I think you're absolutely right. Well, in my opinion, I agree with you. I can't say we're absolutely right or not just because two of us agree.
but
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 so
even
go on.
gold, yeah, but even gold, that still goes down. It doesn't go up forever. It still has periods where it
Yeah,
goes
yeah, yeah.
down, it drops. So at the end of the day, just because crypto is going down doesn't necessarily mean that it's not going to go back up, or there's no faith in it. Or you have to also look at the market position. Is something overtraded? Is there too many? Is it too crowded? And
Mm,
then you have the psychology, like when something sells off, does everyone run for the exit doors and make it go down even further?
mm,
So there's a lot of psychology in involved as well. So I wouldn't say just because crypto is going down now that it's not going to make a new high, an all-time high in the next few years. Who knows? We don't know. But what I would say is that I can't see it ever being having as much faith in it as something like gold because of the aforementioned reasons, basically.
Yeah, and I think for me that's where crypto, like Bitcoin anyway, may struggle. Like, so as even as somebody who is, in favor of crypto, and I'm somebody who definitely is an advocate of crypto, and
Yeah,
it's something I believe in. I think for me, what my speculative feeling around it in terms of people in your position is that very much the things you've said. It's a technology, and therefore it can be usurped. And obviously, quantum computing may destroy everything in terms of how the cryptology works. It doesn't work in the same way as gold because yes, there's a risk of losing gold, obviously, but gold you can hold it, you can feel it, and it's gold. Like you can't make a new version of gold. You can't make new diamonds. Well, you can make new diamonds, but you know what I'm trying to say. Like these are things you
yeah,
can't just replace. And whilst crypto, technically, um, you can just make you can make new bitcoins. You can make your own version of Bitcoin if you like. And I think there are
yeah,
different versions of bitcoins. To be honest with you,
yeah.
that are
I think
used for
there's
different
some,
purposes. Yeah, there's
yeah,
Bitcoin Cash, I think, for example.
yeah, there's Bitcoin Cash. But also, it's like when I'm talking, I was generally more specifically talk about Bitcoin because
Yeah,
I'm not like a expert in cryptocurrencies. I'm more talk about that, but also I differentiate between the blockchains and the technology
yeah,
and then the crypto price.
mm,
So I trade the price. I can have as much faith in the blockchain as I want, but I still trade the price. I might have faith in blockchain, but if I see the price going down and my signals are telling me it's going down, and I think the sentiment or the market psychology means it's going down, I'm still going to sell it because I see them as two different things. And I
yeah, yeah.
think I'm not an expert, so that's just my point of view. But I'm not sure if the experts would say that one has to mean the other one performs. Basically, I'm not even
Yeah,
sure
I
if they
think
would
I
say that.
think I'm not an expert either, but I would view it in a similar way. The blockchain, and I think many people see it the same way. To whether you're an expert or not an expert, or whether you're a cynic or an advocate, I think everybody understands that blockchain may be useful. Crypto price, crypto meme coins, who knows, right? I think people do understand that, and I think people are understanding it's a technology as well and are embracing it on that basis, especially with AI. So when you think about AI and blockchain together, and some of the things we've seen there, there's a lot of powerful things that can happen. But I think for me, the other issue with crypto, I would say, and again, I don't know, you can tell me if I'm wrong, is that I think it's difficult. So if I say to people, oh, if you want to get some crypto, you need to get a wallet, and you need to back up your wallet, and you need to have a seed phrase, and you need to have a recovery phrase, and if you lose it, you lose it, or if you give it to a custodian, that custodian goes insolvent, then you lose it. The moment you start making things hard, I think again that can be a problem for people.
Yeah,
And I
I
wanted to get your opinion on that because it's so much easier just to like open a bank account. It's very, very easy. You can get gold posted to your house, right? It's very, very easy to do these things.
yeah, essentially that's why I trade the ETFs because for
Yeah,
me the blockchain, all that stuff is too complicated. It's
yeah,
too much, and then obviously I'm trading stocks and futures. If I trade the ETF, I can trade on this. I can trade on the same broker.
yeah,
So I can also trade the futures on that broker of Bitcoin and Ether. So essentially, for me, the the wallets, all of that stuff, it's too much hassle. It's too many areas where you need to be worrying about: is this safe? Am I giving up like this? Whatever website I'm using, is it tracking? I don't know. So it's for me. I prefer the ETFs to be fair, and I think that's a big barrier because you got to think the people that I'm not even that old. Imagine the people that are older.
mm,
How can they deal with what crypto wallets? And I'm sure it's easy for people that have been doing it. I'm sure I sound very old right now.
No, I
But
mean,
like,
sorry to interrupt you, but it's not an age thing. Like, well, it is and it isn't, right? So yes, you're right. If you're older, like older than us, it's just no, like just move on, right? And I think to be honest, your financial objectives are very different. You're looking at retirement. In some ways, it doesn't really matter if you're in that situation. But I think even let's imagine you're 18, 19, let's say. The problem I think with crypto certainly is that because these wallet transactions are so long, like, it's a bit like, when you like approve a bank transfer and it will give you a reference and that reference might be like 12 digits and you're sort of pedantically and triple and quadruple checking like every little thing because, the moment you press the button, if you get it wrong, there's a risk you're never going to see that money again. With crypto, it's like imagine that feeling, but like times 1,000, where it'll be like a 50 character string or a 30 character string. And like because there's no regulation, there is literally no way of identifying where the money went, or getting it back necessarily. I mean, there are services now that allow you to do it, but previously there was no way of getting it back, if you made any small mistake. Because even if you made a small mistake with some of these blockchains, it wouldn't like reject the transaction. It would like try and push it through. It would like fail, and then almost like you would just lose the crypto anyway. So there's a lot of peril that you can feel when doing large crypto transactions, which I think for many people can again be something that's a barrier, right? They're just not prepared to deal with that level of potential risk.
yeah, I would say that's exactly my sentiment. That's exactly how I feel because I've
Yeah.
actually dabbled a little bit in it, but then it just was too many steps,
Yeah.
too many different steps. So then the software I'm using, is it dodgy? Is it not dodgy? Because these aren't established companies. And I know the whole point of crypto is not to be run by the establishments, but you also
Exactly. Yeah.
lose that trust and faith because you don't really know. So there was that aspect. So that was my issue with it, to be fair. That was my issue. And also I'm not trying to buy crypto and hold it. So I don't
Mm.
necessarily need to have the crypto like in cold storage or in my wallet. I'm more trade. I'm just trading it. I'm not trying to buy and hold. So it just makes more sense for me at the moment to use the futures or to use the ETF.
Yeah.
However, when you're using the ETF, you can't, and the futures, you can't trade on the weekends, and the actual currency can trade on the weekends. So that's the main thing you have to take into account. But at the moment, what you do find is that there's not much movement on the weekends anyway. But if there does come a time when the volume on the weekends increases, I would have to consider, if I'm going to trade it, trading the actual currencies or yeah. But that being said, it looks like with the stable currencies and using blockchains to trade stocks now, that stocks and ETFs will be 24 hours, 7 days a week at some point anyway. So then I wouldn't have to actually go onto actual blockchain in that scenario.
Okay. Cool. All right, then. I think we can sort of start thinking about wrapping things up, because I'm just conscious of your time. I'm sure, I think you mentioned you've got other things you need to be doing today, but thank you very much for your time. Really, really appreciate it. I think I've certainly learnt a lot. I mean, is there anything else you'd want to share before you sort of head off, or any other insights? Coming back, I know I asked you about, if anyone thinking about trading, what could they be doing? And I know you've already mentioned, what they should be doing, but is there anything else you'd want to leave as a closing thought for anyone still thinking about trading and what they would be interested in trading, whether it be, crypto or commodities or something else?
Yeah, I would say, first of all, like I said, when I talked about getting a mentor, I wouldn't suggest that's the first thing you do. Do a lot of research yourself first. Make sure you actually want to do it. If you can, make sure you know what style you have. Because for one, a mentor's not going to just want to take somebody who hasn't proven that they're going to take it seriously, because it is their time. at the end of the day. And yeah, that would be what I would say. And I mean, there's a lot of information out there that's good, a lot of information out there that's bad, and you have to use your own discernment to know. And with trading, sometimes what is good can be bad because they're not giving you the other sides of it. So
Yeah.
if they're only focusing on technicals, even though it's good information, if they're not giving you the risk management side, or they're not giving you the psychology side, essentially you've got incomplete information. So yeah, I would say do your own research, to be fair. That's what I would say. Or get a mentor. The safest way is if you know you can get a mentor that's proven, knows what he's doing, that's probably the safest thing you could do, and probably the least amount of time you're going to have to spend training or getting used to trading or learning the game, basically.
Cool. Well, as I say, well, thank you very much. I think we'll definitely have to do this again when you have time. But in the meantime, as I say, thank you. Good chatting with you. And until next time, peace.